Are you a stock or a bond? This book written by Moshe Milevsky, I read this book a long time ago, 10, 15 years ago. And I think he re-updated it a few years back. This book really changed my perspective on how I think about how my clients earn income. Are you a stock or bond? And really, you have to use your human capital as a part of your overall financial portfolio. So the conversation today is I'm going to help you figure out, are you a stock? Are you a bond in your portfolio? And where does premium finance or self-funded life insurance fit into that portfolio based on which one you are? Remember to like, comment, share, subscribe, and share this with as many people as possible because you're not going to want to hoard all this good information. So what is human capital? Your future income stream is an asset. Just like stocks, just like bonds, your future stream of income, how you earn money for the rest of your lifetime of earning money, it's an asset in your portfolio and you need to treat it as such and asset allocate around that. Treat your career and your income like a financial asset. In this book, Are You a Stock or Bond? And here at the bottom, you can go to Amazon, click that link, and I'll also have that description section on where you can get Are You a Stock or a Bond? But it talks about how to treat your career and your income like a financial asset. Are you more like a bond or are you more like a stock? So on the spectrum of where you would fall, think of it like this. If you're an entrepreneur, if you're in commission sales, you're in real estate, you're a real estate developer, you're a stock. Your income is up and down, up and down, up and down. You have really good times, you have really bad times. And then if you're bond-like, if you're more like a bond, you're a tenured professor, you're a W-2 executive, you're a medical specialist, you have systematic paychecks, and they don't really deviate much from year to year or paycheck to paycheck. And why that matters for planning is stock-like people need more stability and protection in their overall portfolio, right? Because you're a stock. You're the growth engine of your overall portfolio. So you need stability and protection over your portfolio to even you out from an asset allocation perspective. On the flip side of that, bond-like people, those that get that steady paycheck every single time, you need something that's going to grow. You need something that's going to grow tax deferred. You need a tax shelter for your plan, right? You need that growth engine in your portfolio. Life insurance. And you've seen my other videos. You can go back to some of the other videos that I've done on this. Specifically, IUL complements your financial DNA. So let's talk about life insurance as an asset class. Who doesn't want tax-free retirement income? Especially with everything that's going on right now, tax-free retirement income sounds pretty darn good. Principal protection. Who would love the worst case scenario to be a floor of zero? Especially with everything that's going on right now, super volatility in the markets right now. And you want something that provides that stability in that floor. Tax advantage, legacy planning, asset protection benefits, and something that's not directly correlated to the stock market volatility. That's life insurance as an asset class. And if you don't know, watch this video right here, 10-minute lesson on life insurance. Click that link right there, 10-minute lesson on life insurance. And it will explain to you how life insurance is actually an asset class and has some of the best characteristics that you want inside of your overall portfolio. As an example, a self-funded IUL, think of it like a private Roth IRA on steroids. Just like a Roth IRA, tax-deferred growth, tax-free distributions, except when you self-fund an IUL, you don't have contribution limits. You won't be phased out if you start making too much money. It also doesn't have the age restriction of 59 and a half that a Roth IRA has. It will protect you against future tax rate hikes, which are inevitably going to happen. Tariffs, tax, income tax, capital gains tax, protected from all of that. It accumulates cash value without any subject to market losses. And it's perfect for high income earners, ideal for high income earners. Now, premium finance IUL, which is a leveraging, borrowing of those premiums for high net worth individuals, high income earners. You can watch this video right here, how the wealthy use premium finance life insurance to get ahead. But they use bank financing to fund the premiums. They don't use their own money. They use bank financing, and you can too if you potentially qualify. And it's my job to make sure you, one, understand how premium finance works, two, that you can qualify for it, and three, that it's affordable and the structure that we put together is affordable for you. So some of the other characteristics are retaining liquidity while expanding and creating a tax-free estate, protecting estate value and enhances the death benefit, and used for wealth transfer and tax minimization. Just came back from a meeting earlier today, husband and wife, they've been married for nearly 45 years, looking at a premium finance policy to help provide liquidity in the event of premature death. He wants to work another 15 years. Good for him. And then Premium Finance IUL also provides tax-free distributions inside of your plan. So self-funded versus premium finance. And there's not one right or wrong answer that fits. I mean, not one's better than the other. It just depends on your situation. But from a self-funded standpoint, your after-tax dollars, moderate liquidity impact, moderate high estate planning impact. From a premium finance perspective, bank loan plus collateral, low liquidity impact, high estate planning impact. And so why life insurance complements your human capital? Number one, it offsets your risk or your income risk profile. We already talked about this. We can set the IUL up, self-fund or finance, to be a stock-like component in your portfolio or a bond-like component in your portfolio. It acts as a private pension. Nobody's going to turn away tax-free distributions. It creates certainty in an uncertain tax environment. And it helps de-risk your balance sheet by putting life insurance on your income earning potential. Think about this, your other assets, your stocks, your bonds, your mutual funds, you're not able to put an insurance wrapper around that, or are you? Click on that link and we can have a discussion about that. But specifically talking about your income profile in your balance sheet, putting life insurance around your income earning potential. And by the way, the carriers have formulas for this. If you're 50 or older, it's a 10 to 15 times multiple of your earnings. If you're 40 to 50, it's about a 20 times multiple. If you're underneath 40 years old, it's a 30 times multiple of your earnings. So the insurance companies already have a formula to calculate how to de-risk your income earning potential for the rest of your life, as well as life insurance builds multi-generational wealth planning. So how do you know if you're a stock-like or bond-like person in your portfolio? You probably already know, but you can take an inventory of your financial DNA. So I created a checklist. You can click this link in the bio below or in the description section to access this checklist, and you can bring it to our 30-minute no obligation consultation that we need to have as a result of that, but we can help you out with that. And then the right strategy can align with your, don't just invest based on the market, invest based on who you are. Understand who you are, stock, bond. If you're stock, you need more stability. If you're a bond, you need more growth, right? And we can help your long-term goals. So if you want to see what's possible, book a discovery call. The link is in the description section below. We can get a view of personalized illustration, either self-funded or premium finance, depending on if you qualify. If you don't know if you qualify, I'll help you learn that. And you can learn how to use leverage the right way. Like, comment, share, subscribe. Hope you enjoyed this video. See you in the next one. Peace.